Few things affect people more than the topic of money. Yet, we don't talk much about it. We trudge along and hope things work out, but never really know for sure. I think it's time for some answers. Hi, I'm Tom Stone, and welcome to Talking About Dollars and Sensibility. Today's show is brought to you by Guild Mortgage Company, closing loans and opening doors since 1960. We're located at 175 North Main Street, right here in Heber City. Our phone number is 435-654-9979. Come by and see us anytime. We're right next to the car wash on Main Street on the 200 North Block. Today, I've invited Mike Brown with Atlas Title, who is a guy that's been doing title work here in town for a few years. Mike, hello, how are you?
Doing very well. Thanks for having me, Tom.
Tell us a little about yourself.
Well, I am just starting into turned 45 a little bit ago, and have.
So you hit the old level.
I've lived half my life, I think.
Yep, at least.
At least half my life. I am married to a wonderful woman. We're having our 22nd anniversary this week. We have
Awesome.
4 children from 19 down to 5. And
So a spread of 19 down to 5.
that is correct.
So you take a break in between each of these kids.
We had 2 quick and 2 at the end.
Gotcha.
Big break in between.
Gotcha. How fun. That's awesome. Now, you own Atlas Title.
I do.
Now, the one thing about title companies that I've realized is people go, now, what do they do? You know, title companies, in fact, I was just talking to Sandy, and she's trying to find out, that's the company that, and we're like, no. Is that the one that, no? Because title companies aren't really out there advertising to the masses to come to them.
That is a very true statement. Most people do not know us very well because we come in at the very end of the real estate closing process, and truthfully, people will spend if we do our job well, they'll spend less than 45 minutes with us, and we get to know them for about that 45 minutes, and they never really hear from us again in each transaction that they do.
Why do you say that if you do your job well, it's only about 30 minutes? What does that mean?
Well, we kind of want to be a quiet partner in the whole process. And what I mean by that is every once in a while mistakes come up or things don't go as smoothly, and then you remember us. We're remembered if things don't go well. If things do go well, we really do. We fall into the background pretty quickly.
So truly, that's one reason why I wanted to make sure Mike with Atlas Title came on to the show here to talk about title, because this is truly one of those areas that people just don't know. They don't understand. So the next hour, we're going to hopefully uncover all sorts of things and reasons and just information so that you, the listener, will be able to say, oh, I understand now. So that's a lot of weight on you, Mike.
Okay.
It's going to be on you to make sure people understand a lot of things they maybe didn't know before. So I'm going to just open up with some questions. Whatever comes to your mind, just start chatting about it. But I get asked all the time when people say, hey, I bought my house, but where's the title to my house? How come, or is there a title to their house?
There is, and it's a little bit different of a process than, say, titling your car. And so there's 2 things that happen, or at least that how you have your property. And one of the things that happens, Tom, is the way that things have been set up in the United States is county records. Or all of the records are kept with the individual counties. In our state, it's the county recorder's office that keeps those records. So one of the documents that we prepare, and we'll get more into this, but to answer the question clearly, is there will be a warranty deed or a conveyance deed, usually a warranty deed that is signed by the seller, and then we take it to the county recorder's office and we record that. And it becomes a permanent record with the county recorder's office forever. Those records are protected. They have you'll go over there. They have a very large vault. That in the old days they'd keep everything in the vault. Now they keep everything electronically. But that's the actual title to the property is kept with the county recorder's office. They will return the originals to us. Some people ask us to keep their original titles. Some want them for their own records. The other portion of that is, and this is where we make our money, is a title policy is issued. And at the end of about a month after the transaction is done, we actually issue a title insurance policy that says you own this property, and it gives the terms of what they own and how they own that property, what the entity was that they took title to the property. And so there's two different things. There's the title insurance policy that shows that you own it, And that's if you ever had problems, you'd make a claim on that. But the actual records are kept at the county recorder's office.
So there is no real official title like your car title that you just keep in your drawer.
You would get you can keep the deed.
The deed.
The deed.
Which conveyed.
Yeah, and that is the actual instrument that transfers the title. But that deed is what shows, what shows. And there's been a huge, things have changed a lot, and a lot of it is because of technology. A lot of it is because of lessening paperwork. But in the old days, 100 years ago, you'd actually get what's called an abstract of title, and very, some of the old timers, especially up here in Heber. I haven't always worked in Heber. They understand what I say when I say abstract of title, because it was a whole history of the property. But now, really, it's only that deed and the title insurance policy that you get that shows how you own it.
So tell me about abstract. So what is that?
Well, in the old days, now we issue the title insurance policy. In the old days, you had these really great, when you would finish a closing. In fact, many, like I said, many of the old timers will remember there used to be a title company here in town called Stanley Title and Abstract. And instead of title insurance policy, you would receive this abstract. And, in the back rooms, they would put together an abstract of every single document that had been recorded against the property. And they wouldn't give you an original, but they'd basically type it all up on an old typewriter. And then as you finish the transaction, they would give you this abstract. And it was, some of them were only 2 or 3 pages, but some of them might be 10, 15 pages long that would show every deed that had ever been recorded against the property, every easement, every restriction, and you would have the whole history of the property up from the time that the U.S. government gave it to whichever municipality started with it, all the way down through. And
Can we still get that information?
You can still get that information. It just comes in a much different thing. But those old abstracts were really, really cool. They'd fold up into thirds and look like an envelope, and it was a really, really fun way, but it's very labor intensive, and it was a very, very expensive way to kind of let you know what was going on with your property.
So the title report now shows how much of a time frame as far as title.
Yeah, it's much quicker, because what we basically do is we'll say, our title commitment will say these. You'll have a section on there that will say these are the documents that have been recorded against the property, but all we do is we make reference to where you can find that in the county recorder's office. We don't actually give you the deeds like they did in those old abstracts, or copies of the deeds.
Now, you mentioned a warranty deed. Give me the different names of deeds and why you would use one versus another.
Well, there's 3. It's funny, I had somebody in my office this morning before I came over that was asking this question. And there's 3 kinds, 3 that are used mostly.
Okay.
There's certainly more than that. But what we use, in 95% of our transactions would be called a warranty deed. And Tom, for example, if you were going to sell the property that you own to me, you would use a warranty deed. And what that would mean is you are deeding the property to me, and you're warranting to me, Michael Brown, that property is that you own title to the property, and you're in a position to give that to me. And if I ever had any problems, I could come back to you and say you warranted this to me. Okay. And we can talk a little bit more of that. The other 2 deeds is a special warranty deed. We use these for companies. Very, very minor tweak, where you would say, if you were deeding to me with a special warranty deed, you're saying, I will warranty to you that there were no problems with this property for the time that I owned it, but nothing before me. And then a quitclaim deed. A quitclaim deed is a tool that we use. We used to use these a whole lot more than we do now, but now we use them if we want to clean up boundaries or problems like that. But a quitclaim deed basically says, I'm Tom, I'm going to deed to you, Michael, any interest that I have in this property, if I have any. If I don't have any, you're getting no warranties at all. And so if you own something, like I could transfer to you, Tom, by quitclaim deed all of the property in Wasatch County. And what you would get is the one building that I own that Atlas Title is in, because that's all I own.
That's all you can.
That's all I can. That's all I can give to you. There'd be nothing else would obviously transfer.
Can I or you deed over percentages?
Absolutely.
Of property?
Absolutely. There's all sorts of different kind of tools that the state has provided us with, and you can do percentages in property, but the percentage that you have in the property is usually to the entirety, and people get that mixed up. For example,
explain that.
Yeah. So if let's say that you and I were partners on a piece of property, and you had 50% and I had 50%. But to be funner, let's say I have 51% and you have 49%, because then I'm in control.
Got it. Got it.
But the idea is is a lot of times people will come into my office and those aren't used that common, but they'll say, me, my brother, and my sister all own 1/3% of this property. And they want to split the property up in thirds and say, I get the property on the left, my brother gets the property in the center, and my other property, my other sister gets the property, on the left. But that's not how it works. What it is you have a third interest in the whole piece of property, and I have a third interest. And so it's normally you get the percentages to the whole piece of property. And that makes sense if you think about it, because, it would be very difficult to say, I get the front half and you get the back half.
So if I had a third and you had a third and someone else had a third, can I sell my third to a new party without permission from the other 2/3 or with?
Well, all of these answers that I give, I'm going to say usually, and that's because there's sometimes restrictions, but absolutely.
Okay.
For those of you that have played golf in the county, if you play on the second hole over at Homestead, which is now Crater Springs, there's a whole row of condos that are right there on the second hole, and every once in a while you'll see somebody drape over a sign over one of the balconies and say, I'm selling a 1/6 interest in this condo, meaning you get it for 2 months, and they'll have restrictions on it, but you're not buying the whole condo, you're buying a 1/6 interest. You see the same thing with houseboats down in Lake Powell or condominiums. If you were to buy something as a timeshare, you might get a 53rd interest.
So would you deal with timeshare purchases?
We do. We try not to. It's a very,
because that's different, isn't it? That's not real property.
It is real property.
It is real property.
It depends on the condominium project. It depends on the project that you're in. Most of them are, but that's the reason we will deal with them every once in a while. But if we do, we like to deal with them from start to finish, so we have all the records, and so everything kind of,
because it can get muddled pretty quick.
It does, and
with 6 owners and all sorts of things.
It's a perfect example. Is there's a development that's down just outside of Fairview, Fairview Canyon, and they, I was telling you earlier that all the records are kept at the county. Well, this one they've decided to keep all of the records at the homeowners association, and so somebody had wanted to sell out their piece of property. And I drove down to the county records and I couldn't find anything. And I searched through all the books and I banged my head against concrete for a while. And then I finally talked to the county recorder and he says, "Oh yeah, we don't have anything on that. You've got to go talk to the homeowners association." And at that point, we take a huge step back, and I won't deal with those ones because there's no public records.
Sure.
It's harder for me to ensure that. But you do, and Park City has some of those where most of them they try to record them in the county, but there's some where they just want to keep their own records. And so you're dealing with an entity and you're buying. At that point, you're buying real property, but it's not really insurable.
So from your experience, would you then warn somebody against buying percent interest in something that's not recorded?
Not necessarily, but I would ask them to do a tremendous amount of due diligence, and I would explain to them that they're certainly getting something different than it's just a different product. It's a different product, and they have to be very, very comfortable with the homeowners association. I would tell them to feel really, really comfortable with that, and I'd probably ask them to find other owners in there and say, how is it to work with that homeowners association? How do you feel about that? Because at that point, you're taking all of the public records out of it, and you're having to deal on a it's more of a community partnership in something like that. And they're not terribly common, but they are out there.
You still use a warranty deed with these timeshare situations?
You do if you're transferring the real property, and and it goes back to your original question. For example, there's all sorts of these that are around by up by the canyons, where you buy something and you get a 1/52nd interest in Unit 6, which basically means you get a 1 week. You get a 1 week interest, and if you go and look at the county records and you pull up that lot, there's deeds all over the place, and you have to kind of sort through them to say, okay, yeah, he's selling you the 42nd week of the year, and that's the week that you get. And but it gets more difficult, but it certainly can be done.
You just said the phrase through that conversation. It's something I don't necessarily want to insure.
Okay.
So explain to us what's being insured. Now, I think you already have, but let's just make sure we understand that.
Well, yeah, and an insurance, just like any other insurance product that's out there, we have all sorts of different ways that we can insure properties, and that's what it comes down to is we'll go back to your question about deeds for a minute, and say what kind of deeds that you use, and the whole reason that you have title companies to begin with, because that's probably a very good place to start with to answer this question, is, Tom, let's go back to the example that you were selling something to me.
Okay.
And let's say you used a warranty deed to deed me, any piece of property, an acre lot here in town, and there becomes a problem with it.
Mm-hmm. A
And-
problem like what?
Well, let's say, for example, that when we'll make this up, I don't know what your father's name is, but for this case, let's say it's Tom Stone.
Okay.
You're Tom Jr. and he's Tom Sr.
Okay.
And, we should probably use a different example, but you decided to sell your dad's lot.
Okay.
And you deeded to me a piece of property that actually your father owned. And 2 years later, your dad goes in to pull the building permit and build a house, and the county records show that now I own that property.
Mm-hmm.
And they do a little digging and everything, and they say, oh my goodness, well, Tom Jr. sold that lot.
Mm-hmm.
Now, we have a problem,
Mm-hmm.
right? Because I have a deed to that property, but you are not in a position to deed that over.
Yep.
And this is an extreme example, but then all of a sudden the county is going to get involved and say, wait, we have the wrong person, and they're not going to transfer that title. They're going to pull it back and title that to your father's name. And I'm going to go back to the warranty deed and say, Tom Jr., I gave you X amount of dollars for this. You need to pay me back. You warranted this to me.
Mm-hmm.
Well, you're long gone, or even if you were still here,
Mm-hmm.
you don't have the money to give me back.
Right.
And that's really where the insurance comes in.
Mm-hmm.
Because if you buy a title insurance policy, if instead of going to you to make those things right, you make a claim on your insurance policy to a company that does have the funds to make that right.
Got it.
And that's where the insurance policy comes in, so that as a consumer, you can use the property and have a level of confidence that you'll be able to use the property in the way that it was described to you. And if for any reason you can't, you have somebody that you can fall back on to and it's all about confidence. It's interesting that a couple of the underwriters that we've used in the past, they have gone into countries that are now getting into real property. And in fact, well, you don't even have to go outside of the United States. Hawaii in the 1950s was all owned. Hawaii was all owned by by royalty,
Mm-hmm.
and then they had to go into the process where they were going to start being able to convey property.
Mm-hmm.
And some of our underwriters have gone and helped with that. But now our underwriters are going into countries all over the world where they've never had, people being able to own property, and they're creating that confidence so people can say, the government's not going to take this property back from me. That I will be able to own this property, and they're working with governments to go through that process.
Well, let me break for just 1 second for station identification. You're listening to KTMP 1340, your hometown radio station. Today's show is brought to you by Guild Mortgage Company. Your loan on time, every time. I want to do a little plug here. Mike and I work with the real estate agents here in town, and just before this show, and they're actually currently still doing their awards banquet. And the plug is this. That's a bunch of classy folk, and I mean that sincerely. They walking in, I'm shaking their hands, and I'm like, what a nice guy. What a great lady. So on and so forth. One of them said, please plug me, and she said if all I said was just call her the crazy one, that would be good enough, and she knows who she is. So I told her that I would plug that for her.
Now I'm wondering. I'll have to talk to you after.
Okay, so I want to talk about what a PR is.
Okay. A PR is an acronym that we use for what's known as a preliminary title report.
So the PR is preliminary title report.
Correct.
Okay.
And what that is the real estate transaction begins. Whether it's a refinance, but to keep this fun, we'll say it's a purchase.
Yeah.
A real estate agent will contact our office and say, hey, I'm getting ready to sell whatever property. And then we go to the county office and the recorder's office, and we start digging through, and we try to find out every single thing that we can that's happened to that property.
Mm-hmm.
And so you basically have three parts that come to the title commitment. And the first
Title commitment, same thing as a PR?
same thing.
Same
as a
thing,
PR,
okay.
Yes. And so what that commitment does is it says this is everything that affects the property. So the first section is these are your owners.
Okay.
It basically says this is who the owner of the property is.
And it could be people, could be a trust,
could be a trust,
business,
could be an LLC,
could be a bank.
Could be all sorts of things. And that's important. It's a very, very important thing because you have to know who your owner is.
Mm-hmm.
And most of the horror stories, and we might get into some of those down the road in this conversation, you have to know who you're dealing with. And a lot of times, the people that have been using the property for a long time, they don't even know. and we'll talk about that. But so that's the first portion: is who's my owner? Who's the person that can actually deed this property to someone else? The second section is what's called a requirement page that basically says these are the instruments, these are the things that would have to happen for us to be able to transfer the title over. Okay. And some examples of that is let's say you had delinquent property taxes. You've got to bring these property taxes current.
Why?
Well, because if you want to buy a piece of property, the last thing you want to do is get in, and then the next March, you all of a sudden get a notice and saying your property is going up for tax sale because there's 5 years worth of delinquent property taxes.
So what you're trying to let them know is they're buying free and clear title.
Yeah. And then we'll get to the last part of that question. But the requirement, so example, you said that an owner might be a trust. And so what we do is we will say, this is the trust, and then one of our requirements will be, we need to have a copy of that trust. So we can go through it and make sure that the trust is in a position to sell. And so those are some of the things that you have as requirements. And then the third section is probably the most important, and where people should spend their time, at least the buyers of the property, because there are certain things and certain restrictions. And so when you say free and clear, we are going to say you will get the property free and clear except for these listed exceptions. And one of them is, for example, the property taxes in the current year. We can't, if we're doing a closing in November, in April, we can't, the taxes are going to come due in November. You're going to have to pay those. If you live,
so they're accruing.
Yeah, they're accruing,
and that's why you'd have to say, hey,
right,
they're going to be coming.
They're going to be coming. We want people to know what to expect. The same thing, if you live in a subdivision, for example, you'll pull out the plat, and they'll have they'll have all the different roadways, but they'll also have the utility easements listed on that plat. And so we say, it's subject to those easements that are on the plat.
And what does an easement do for somebody?
Well, there's a million different kinds of easements, but for most people, what an easement would be is to get utility lines to the house, to get sewer and water. They're mostly public utilities, but they can be, irrigation. They can be access easements or right-of-ways. There's all sorts of different things that can be in there, but we want you to know about those.
Okay.
And then the other thing that we list is any kind of liens or loans that are on the property, and that also shows up in the requirement page saying, hey, we have to pay off. If you're going to sell this property, you need to pay off you have to pay off your loan. You're going to have to pay off, if there's an IRS lien or something, or any other creditors out there that have filed the proper paperwork. Those things have to be taken care of. So the new seller can feel confident and walk away saying, "Hey, this is my house, and I know exactly what I'm getting." So that's the purpose of a title commitment: is say, "This is what I'm getting."
Now, you actually gathered information, right, and prepare this document to give out to a buyer and to a lender and to real estate agent. Where do you gather that information from?
It's 90% of it is from the recorder's office.
Okay.
The recorder's office is, to call them a partner would not be fair, because everybody can walk into the recorder's office. But our office spends a tremendous amount of time with the recorder's office. We know that office very, very well. We know our way around the computer systems. We know the staff that works there. They're wonderful. They're so easy to get along with, but we have to know them.
Give them a plug.
Well, they make our lives. I do. I travel to all the recorder's office throughout the whole state. And I would say that our recorder's office is top notch. They are wonderful, but they are also so friendly. I go into other recorder's office and I'm scared to touch anything. I'm scared to go through anything. They don't want me. They hover over you, and nothing could be further from the truth with ours. They very much want to help the people that come in, and they want things to be done right.
I've had that experience as well. That's nice. It makes your job easier.
Certainly it does. It certainly does.
It's awesome. I want to know about a little more about these easements and rights of way and different things. Do I have to have those on my property?
Well,
if they're there already, can I say I'm not going to have those?
Yeah. Well, and there are several things that a title policy, and the title commitment is kind of a pre-runner to the title policy.
Okay.
We take that form and
so hold on a second. Title commitment,
right,
and then title policy.
Title policy.
Two different things.
That's the insurance policy, and saying this is now. The insurance policy gets issued after the closing and says this is your property.
So really anybody could go to the recorder's office, gather some information on this property, what you're doing. You just happen to accumulate it into a report.
Correct.
And then the difference is you're going to insure that they're truly getting the title that they're purchasing.
Yeah, that's correct.
That's the difference.
That's the difference. And we also feel like we're better at it because we do it all of the time.
We do it all the time. So you could
be
miss
the same
things.
thing. I can work on my car, and there's a lot of things that I can do on my car, but Tracy's Automotive can do it much better than I can. So,
Amen to that.
You were talking about right of ways and easements, and those are things that are very, very tricky, and they're even tricky to us a little bit because there's so many different variations, and they're set up for so many different ones, and some are set up really, really well, and some are super, super, super vague, and
Like what? Super vague would be what?
Well, for example, I a long time ago I did a transaction down in Utah County, actually all the way out down on the south end by Mapleton, and there was a piece of property that didn't attach to county road, a city road, any kind of highway, but there was a right of way that was granted that went from that road, from the roadway, the one that goes right out to the mouth of Canyon through Mapleton, and then it went up about 600 feet to a piece of property back behind it, which was absolutely beautiful. This one wasn't horribly vague, but it basically said, we grant access, to the current owner of that property to be able to get back to, back to use that property for what it, for its intended use. Well, for years and years and years, this happened. This actual problem happened to us in the 90s, and but I would say from the 50s it was used as farm ground, and so a couple times a day, the person that owned that property would drive his tractors or whatever he needed back up to the property,
and that's the purpose of the.
And that was the purpose of the easement, and it was intended. It was the intended use, and it certainly was. I mean, that's how it had been used forever. Well, a developer came in and bought it. A developer came in and bought the property, and right after they bought the property, a couple days later they had a huge grader out there, and they were grading this road and turning it into a very, very large access. 66.
So the easement also turned into a road.
Yeah, they were trying to turn it into a roadway, and they're saying, "Hey, we're going to put 150 lots back here," and that's what they were. That easement through this neighbor's property is what they were going to use as their primary access. Well, that was not the intention. That's not how it had been intended. And so the farmer got down there and blocked the way, and they went to the courts, and those are the kind of things that are really, really tricky. So we, and I was working for a different title company at the time, but the idea was, hey, yeah, there's an easement, but you can't change what the intentions of an easement's going to be. So
the intention. So you have to stick to the original intention of it.
Yeah, well, and that's exactly right. And so we like things that are written, in our industry, we like things that are written very, very specific, because then we have a great idea of what those are supposed to be. When they're vague, this one was a little bit vague. Then all of a sudden, this guy had put a ton of money, this developer put a lot of money, and was saying, hey, this is how I'm going to access this. And all of a sudden, he was shut out. And in that case, he should have been shut out. He was changing the intention of everything.
And it could have been misrepresentation from the seller or anybody involved.
Yeah, certainly could have been. And and it could have been just, I'm not going to, who knows exactly what went on behind the scenes on that one. But it's a perfect example of how those things tend to shake out.
So what should he have done? Instead of calling it an easement, he should have had it become a.
Well, what the best way for that would have been, and probably the reason that he didn't, is he should have dealt with with the current owner of that property that the easement was going across, and saying, before he ever bought the property, he should have said, this is what I'm planning on doing. Let's change the scope of this easement, given some consideration, and written a better easement, or even worked out an agreement where they deeded the property to the municipality and allowed the municipality to put a dedicated road in. And you go back to that. That's one of the things that we guarantee, that's on every title policy, unless we specifically write it out. And if we do, we will make sure everybody knows is we guarantee access. And if you don't have, because you have to be able to have access to your property. Now, and that's where these easements become a very good thing, is what kind of access are we guaranteeing?
Right.
I would like to be able to specifically tell you what kind of access.
So I need to go to you and say, this is my intention.
Yeah.
Here's why I'm buying this property. This is what I need to have insured.
Right.
So you understand it.
Yeah,
I try and be a secret behind your back and then come back and get you because it doesn't work. You're like, wait a minute, I had no idea you were trying to do that. Is that true?
That's true, and I think one of the things that people don't understand about title companies is we try to fix a lot of things, but sometimes we're not the fixer. And so you'll come in and say, I'll say you have access, but this is the way that I understand it. You're going to want to get an attorney. You're going to want to get somebody else, or you're going to want to sit down with those neighbors and get it changed. But as far as I can tell, this is what I think that you're getting. And if you need something different, then you've got to work that out. But that, you go all the way back where I say I'm a little bit worried about those things. We really, really like things to be specific, well written, and we have that happen all the time. People come into my office and say, "Hey, I just need an easement to the back of my property. My neighbor wants to use it. Can they just run along the fence?" And that's all they want to write up. And we try our hardest to talk people out of those things, because what the two owners now understand, well, they're not always going to be the owners,
right? And
you're going to have other people, and so it's not just a matter. It's a matter to make things better for everybody that comes after you as well.
You bet. You're listening to KTMP 1340 AM, your hometown radio station. Today's show is brought to you by Guild Mortgage Company. Your loan on time, every time. I'm Tom Stone, and we have Mike Brown here from Atlas Title talking about title work and everything that goes along with it. Let's talk about another kind of deed. I want to talk about a deed of trust.
Okay.
Give me some details on a deed of trust.
Okay. A deed of trust... A deed of trust, and Tom, if I get too specific here, you call me off, because we tend to talk in a little bit of odd terms.
Sure.
But again, I've made mention to some of the old timers will remember things a little bit different, and that's true. And we even use the terms today, but a long time ago, what a deed of trust is kind of has grown out of is a mortgage, and people might understand that term a little bit better, and years ago, I would say probably 3 decades ago, the state of Utah moved from a mortgage state, and a lot of the other states did as well, to what's called the deed of trust state. But the deed of trust, its primary purpose is to secure a loan onto the property. And so,
does it take title?
It does not take title. It encumbers title, and it gives an interest to the whoever the lender is going to be.
Okay.
And so, for example, we talked about Guild Mortgage. If Guild Mortgage does a loan, and let's say they lend $100,000, we at closing we will have the borrower execute a deed of trust that says, "I owe Guild Mortgage $100,000," and we record that against the property. And what a deed of trust allows for is it's a security instrument for the lender, and there's several purposes for it, but the sole purpose is if the borrower stops to make the payment, that deed of trust allows for the lender to be able to foreclose on the property and protect their investment into that loan.
So I know obviously a little bit about this. It doesn't talk about a lot of the terms of the loan.
Right.
It just gives the dollar amount and the time that it's paid off. Anything else?
Well, it does talk about restrictions. They're restrictions because it says they want, so, I mean, it's 15 pages long usually. A lot of it is legalese, but the idea is if you are going, if you're a borrower, it talks about restrictions of things you can't do to the property. You can, and basically the easiest way to say that is you can't do things that decrease the value of the property. And then it talks a lot about the terms of what happens if you stop making the payments. And but you're right.
So in this deed, it does say you must take care of the property, keep it in good repair, no hazardous substances, for example. And people say, wait a minute, this is my house, I can do what I want. But per the deed, you're actually signing saying, I will take care of this thing, keep it nice, make the value basically stay.
That's correct. And we use a lot of legal terms in the title industry, and that's exactly right. It is your house. You can do whatever you want to it, but within reason. And if you are going to borrow money from a lender, they are all of a sudden going to say, if we're going to lend you money, then you will do certain things. And it's the same thing saying I can do whatever I want. Well, that's true, but the same thing with zoning things. Properties are zoned in different ways by whatever municipality you sit in for a certain reason. They want a certain feel. They want to be able to keep a certain feel to the property, and so you can do whatever you want except for the restrictions that are put on there.
Because you're borrowing someone's money?
Yeah.
So they don't have title, but they have an interest.
They have it. That's exactly right. They create an interest, And the proper term is a security instrument. And the difference is, and this is something that it's not unique at all, to Utah, but the West, most of the states, all of the states that I know of, are a deed of trust state, which means that you go through a non-judicial foreclosure. So if I stop making my payments, the courts don't even have to be involved for the foreclosure process. A trustee is assigned, and they go through it. Where in the olden days, where you'd have a mortgage, the only way you could get that mortgage foreclosed is you would go through what's a judicial foreclosure, and you would go through the process in the courts. And a lot of those things that we heard in the downturn, where in the state of Florida, where you had the robo signings and all of those things that really turned ugly and got really, really nasty, is because those are still foreclosure states. They go through the judicial procedure, and it's a much more difficult,
arduous, and oh my goodness.
Yeah, it's a very difficult thing, and certainly if all of a sudden you have lots and lots and lots of people going into foreclosure at the same time, like you did in 2009, 2010, it binds up the system, and it really created all sorts of problems.
We mentioned an interest as a deed of trust creates. What about like a notice of interest? What if somebody says they have some claim, just an individual? Can they come to the title company and say, this guy owes me money, so maybe there's mechanics liens, notice of interest, these things? Can you go to the title company and just say, I want to put $10,000 on this guy's house because he owes me some money?
Well, kind of. Yeah, certainly it's... And that's one of the things that a lot of people get really, really frustrated about. Is, for example, we talked about the county recorder's office, and any person can prepare any document that they want and walk in and present it to the county recorder, and it needs to be recorded. As long as it has a couple of things, it has to have a legal description that says this is the property I'm concerned about. And if it has a notary and and a couple other smaller details, the county needs to record it. So, for example, and I'll break these out because to me they're they're completely different things. But a notice of interest would be something where it can be a contract that I have, or if I have some kind of agreement with the current owner. If I have an interest to that property that was not created, like say with the deed of trust, then I can go in and I can file a document. It's usually one page that says I have a notice of interest in this property. And then what that does is it places kind of a hold on the property. And at least for me as a title company, if I go in there and I do my title report and I see that, then I'm going to contact the owner, and usually I'll contact the person that's filed and say, hey, what's going on? What's happened here? And and a lot of times the owner will say, nah, that person's up in the night. I don't owe them anything. They didn't do this. They didn't do that. And then I say, okay, you need to go to the courts and get this resolved and get that taken care of. But anybody can go in and file those things, and that's where the huge abuse is. Yeah. Is you can go in, but the good thing is they've created. You have to really encumber property. You need to have some legal ramifications to do it, and the courts will remove it. And there's actually some penalties, and they can kind of push back and say, just because you think that you're entitled to something, you have to be able to kind of show it. But it's a means to kind of slow things up and get everybody to talk about it. So there's a perfect place to file notice of interest, but just because you're upset with your neighbor, for whatever crazy reason, that's not an instrument that will really work. You brought up mechanics liens. Mechanics liens are a different animal altogether. Mechanics liens are used for contractors or subcontractors who have provided work. In some way did something to improve the property. There are all sorts of state laws that allow them to place a lien on the property to hold their interest. So if they don't get paid, they have a way of being able to make sure that
same idea but different ramifications, different legal procedure.
Certainly, completely different. I would completely different than notice of interest.
Okay.
A mechanics lien has a stated amount. It's because a contract's been put in place, and the contractor has to do very, very specific things. I would specify that and say it's a lot closer to what we talked about earlier, a deed of trust.
So if I'm a subcontractor, I do some work on a house, I don't get paid. If I'm kind of like a handshake kind of guy, and some guy hires me and I go do the work, but yet I never signed a contract, I never had it in writing, but I did the work, do I still have a right to do mechanics lien?
You do have a right to do a mechanics lien if you provided some kind of improvement to that property.
How do you prove it if you didn't do a contract?
That's what I was going to get to. It gets a whole lot harder, and obviously these things we're talking about very general. There's very, very specific things that the state of Utah requires that you do to make those things valid, but you do have rights. You do have rights to file that, and that all of mechanic liens are dealt with eventually. If you have to get to the point where you really want to get paid and force the issue. The one difference between a deed of trust and mechanics lien, to force that issue, you have to go to the court system.
So timing is also important. If this person goes and does their final loan, pays off a construction loan, their loan's in position, and then you file a mechanics lien, it'll sit there maybe for a long time until the person goes back and tries to redo their title. Is that correct?
It is, and if it's not filed correctly, it can actually expire. There's a lot of things. Mechanics liens, we'll have contractors and subcontractors and people that are not, that want us to file liens for them, and we very much encourage people to get an attorney or to get there's companies out there that's all they do is mechanics liens, because that is a very, very difficult animal, and to enforce them, you have to do them right. There's because of the same thing, Tom. For years and years and years, those were horribly abused, and people would just file them on property all the time. They might have gotten paid, but thought they should have got paid more, and file them on there and tie up the property. And so there's some. It's becoming a much, much better process, but that's mechanics liens have been very, very abused.
So both of these things really do have kind of an open-ended. Yeah, someone could file mechanics liens and they really don't deserve it.
Right.
Someone could do a notice of interest anytime and they may not deserve it.
That's exactly right.
But so you have to plan for the idea that, hey, we have to go in and probably do some litigation.
Exactly, and we don't do a tremendous amount of work for attorneys, but we do from time to time, and a lot of that's what we'll do is we'll help prep to get those things ready and say, this is the history of the property, this is where everything came on, this is how things got taken care of, and the great part about our job, and most people do not understand this, I think that most people will never understand this, our job is to be the neutral third party, and so people will always want us to come in and say, geez, what do you think? And I my patent answer is, well, I can show you everything that has happened at the county recorder's office. I can show you everything that's happened to the property, but we try very hard not to pass judgment to decide who's right and who's wrong. That's not our arena.
So you really are ensuring lawsuits, minimizing lawsuits.
Well, from time to time, and sometimes, like I said at the very, very beginning, sometimes if we don't do things very, very well in our industry, we can tend to make the problem worse. And I only say that because it's something that's true, and it's a job that you have to be very, very, very careful in. And if we're not very, very careful in the documents that we prepare and the way that we do it, we can help we can make the problem worse a lot of times, and we try our hardest to minimize that.
So being a neutral third party, and we have these transfer of title, I'm selling my property, take me through the money. So obviously when you transfer title, it's almost always to do with some money. Tell me how the money transfers and works out so everyone gets their money without one getting it and not another. Well,
and that's I'm glad you went to that, Tom, because in the state of Utah, we're certainly not unique, but I'll contrast this with the state of California, for example.
Okay.
In the state of California, you have a title company, and everything that we've talked up to so far would be done in a title company. Then you also have an escrow company, and the escrow company handles all of the money. And even
two different things.
In the state of California, they are two completely separate different things,
okay.
And they work. They might share the same building, but they're registered with the state separately. They handle everything separately. In the state of Utah, they allow us to do both. And the truth of the matter is we talked about where most people don't know their title company very well.
Yeah,
that's mostly where people come in and they see us. They don't pay a whole lot of attention to the title part because it happens in the background, and again, if you don't have any problems, that just all happens in the background. You get your property, you live in it, and you're happy, and everything's great. But everybody wants to know what's going on with the money, and we are watched very, very carefully by by our state. The state of Utah watches over us to make sure that every penny is accounted for, and so does our underwriter. They want to make sure that we have very, very good procedures in place. And it comes down to each transaction. That I would say that it's probably the most important thing that we do is, let's say you're selling your house for $150,000. That is going to be the largest transaction that party's probably ever going to be involved with.
You bet.
And that's what we do. We'll come in and we will sit down with the people, and we have a document that's called the settlement statement, and we'll go through line by line and say, if you're the seller, for example, we'll say, okay, these are all the fees that are associated with the loan. We're going to pay, we're going to pay this person. We're going to pay this person. And then we say, okay, and we're going to pay.
So you make sure you show everybody's fees, not just yours. You're accountable to make sure everyone knows that every nickel and dime.
If realtors are involved, we show the realtors.
The commissions.
Yeah, and we go all the way through. We go all the way through that, and then we'll say, okay, there's a homeowners association. We've made sure that they've been paid current. We talk about the property taxes, but then we talk about the loans. We're going to pay off Wells Fargo $120,000. You happen to have a second on this for $15,000. We're going to pay that loan as well. And at the very end, this is how much money the seller's going to get back. And so we handle every single penny of that. And the same thing for the buyers. We go through with the buyers and say, here's what all of the lender's fees were. Here's what any credits you might have. This is how much money you need to bring in. This is how much money the lender is going to provide in your behalf. And that's where people know us. I mean, that's really where, and it's funny, Tom, because you're a loan officer, you handle the lending part, and you said people really don't know their title company.
Right.
I was talking to one of my sister-in-laws a couple months back, and she said, "Hey, Mike, I need to get a loan. You can help me with that, right?" I mean, my own family doesn't know what I do because they come in, and the big part where we're dealing with it, and it goes back to being that neutral third party, is you will go through the whole loan process with everyone. But 9 times out of 10, I will go through the loan documents with them.
Right.
Because the lender wants a neutral third party to say, will you explain our documents to that new borrower because you don't have an interest. The only interest you have in is handling the money, ensuring the transaction. And I'm the one that, I or my staff, and we have a spectacular staff, will sit down and go through each one of, we'll go through those documents and let people know exactly what's happening in the transaction.
And you literally have a bank account that everybody's money flows through.
We do, and that's what I was talking about about the auditing. The state of Utah allows us to have a general trust fund, a trust account, and all of the money that happens in all of the transactions at Atlas Title. So basically, all of the money that is not ours. We have obviously other accounts for our operating, but that's our money. But if you're buying your house, and you're selling your house for $150,000, that $150,000 will come into that trust account, and then every single penny will be dispersed. And at any time, we have to be able to account for every single penny. And it's funny. I wrote this letter. We had some adjustments that happened in the closing a couple months afterwards, and for one reason or another, we had to write a check to a woman over in Park City, and it was hilarious because it was for 18 cents. And we sent the check out, and obviously it never got cashed. And then we wrote another one, and I had to write a letter, and I said, please, I know this means nothing to you, but this 18 cents has to get out of our account. So I've sent out, paid for 2 stamps. I've written a letter and everything saying, will you please cash this 18-cent check, because we have to be able to show that every single penny was accounted.
Literally every single penny.
Every single penny.
You mean that? You mean that?
We have to, absolutely.
Tell me about a legal description.
Okay. Legal descriptions come in a lot of different formats, and it really depends on where you are in town. And that's one of the things that I love about working up here in Heber is if I sit down with some of these people that have worked their ground, they can tell me about every dirt clod, and they can tell me about every fence corner, and they understand legal descriptions. I've been doing this now for 20 years, and they understand it better than I do. But, we'll start really simple, and let's say you live in a subdivision.
Yeah.
It's as simple as this for a legal description is you own lot 20 of X subdivision. And then we'll put something to the effect as shown on the official plat recorded, in the county recorder's office. And then there's a master plat that's there that shows exactly what the dimensions of lot 20 are, and that's good enough. And that's, that's, the bulk of people in our valley, they live in subdivisions.
Yeah.
You take it one step further. When Heber and Midway were first incorporated, they created city blocks.
Mm-hmm.
And I think that Heber City has about 150 city blocks, 147, something like that. Midway, I think, only has about 18. Walsburg has several. But the idea is that you take these blocks, and so, for example, Tom, your office right across the street here is in a city block.
Yes.
And mathematically, they'll go out and they'll say, okay, starting from the southeast corner, you go over 100 feet. You go to the west 150 feet, and you describe the property mathematically.
Mm-hmm.
And those we call
in
those,
feet.
Well, not necessarily.
There's rods.
There's rods and there's links, and now most properties, I would say the bulk of them have been converted into feet. But
Okay.
the big one was chains for a long time.
Chains?
Chains.
What's a chain?
66 feet.
66 feet. So how many
yeah.
chains would be 66 feet?
Well, one chain would be 66 feet,
Mm-hmm.
and that's please. I have a wonderful. Over at the county building, I'm certain that the recorder's office will be laughing at me, but they have a little chart, and I run in there, and if I find some of these old descriptions, and I'm out there doing with my calculator
Mm-hmm.
and trying to sort out exactly what those all mean. But yeah, most everything's in feet, but not always.
Mm-hmm. What's a meets and bounds?
Okay, and a meets and bounds is the next one. When you get further out into the county, there's a very wonderful way. It's a beautiful way that things were set out in the state of Utah. And so you could say section 5, township 4, and range west, everything up here would be east.
Mm-hmm.
But down on Temple Square in Salt Lake, one of the very first things that they laid out, if you go to, let me think this through, if you would go to the northeast corner, there's a nice little plaque there on Temple Square,
Mm-hmm.
and it says this is the Salt Lake Basin Meridian.
Hmm.
And everything bases off of that point.
Everything.
Uinta Basin has its own.
Okay.
They have their own meets and bounds, but something starts from a very, very simple thing. But so if you get out into the county, you get into Walsburg, you get out into the North Fields, then what you do is instead of referencing the block, which has an official plat, you reference off of these sections, which oddly enough go all the way back down to Temple Square, and it was one of the first things that
Really?
they said.
Hmm.
Yeah, and there's some really great history. That's one of the reasons why the Saints got here so late, is because they were waiting for some survey equipment, because they knew that they were going to have to do that.
Really?
And it took 3 weeks to get from England, later than they thought it was going to. And the second that all the survey equipment set up got to them, then they came out, and that was the first thing they did, and they started laying things out. And there's some fun stories about that, but it was it's a beautiful system that we have, and you can pinpoint things a very, very wonderful way. And truthfully, now with survey equipment and GPS, we get down to the more than the hundredths of an inch of exactly where your property is.
So my office building across the street here, 175 North Main, when I was involved in that, there was some discrepancies with the legal description, which was a meets and bounds. And they were telling me that actually on some of that block, they're off a few feet. How does that happen?
Well, a lot of it happens because, and surveys are better to answer this question, but, I think I understand the basic rules of it. But usually the reason that happens is because things change over time. And what I mean is you get better calculations and what they've been using to start with. But, for example, if we go to a section is a mile by a mile.
Mm-hmm.
And if one property starts, on the northwest corner and another one starts on the southeast corner, sometimes mathematically, the idea is that a section is exactly perfect mile,
Mm-hmm.
but they're not always perfect. And so then as you break those things down to smaller and smaller, then all of a sudden you'll end up that there might be some discrepancies, and you work through that with your neighbor and get those things taken care of. We had a perfect one, Tom, down in Provo. This again was 20 years ago, where the lot lines had all adjusted, and if they did it mathematically, it worked out that each person had moved down about 30 feet. And so everybody's property line was going right through their houses. There was, those old houses down there in Provo, down by the cemetery. And so it's just a matter of getting everybody to, say, okay, wait, we know where these things really are. And now that we have better calculations, we'll move everybody up, because the last person was cut out, and his property went right through his house, and what had been described for years, the bulk of his yard would have actually been, the street.
But it takes everybody to get on the same
Yeah,
page.
and it's just a matter of cleaning those things up, and everybody wants what's right, and you move it back in. Every once in a while, things get a little bit contentious, but usually there's very, very good reasons, and there's definitely tools and ways to sort those things.
What
out.
about if there's a meets and bounds description, there's something that's mathematically something, but yet then it references a fence or references the corner of a building or something? Does that take precedence?
Well, and those are kind of those things that it depends. I wish that I could answer those. But what I've always been taught is deed lines supersede fence lines. Now, and the reason that is because fences move.
Mm-hmm.
Fences move, and fences weren't always put in the right place. I have a great story that one of my underwriters, he was a wonderful, wonderful man, and was about as smart as anybody I've ever met. And he was the first one to buy in this new subdivision. And, so he built his house first. The other houses were being built. And he went out there to put up his back fence, and he said, I want to be sure. So he moved his fence in 6 inches.
Mm-hmm.
And the funny thing is then as everybody else built in that subdivision, they all matched off of his because they just figured his was right, but everybody was off 6 inches. And 6 inches doesn't sound like much, but those are the kind of things. And if we had time, I'd tell you a great story about one time when I met with the owner of Raymond Farms, and because I was very young at that time and thought that I understood everything, and he taught me a wonderful lesson about fences. That
give us a minute. You got a minute. Go for it.
Okay, I'll give you a minute. So
tell us that story quick.
We'd received a survey, and the way that it looked is that his fence line was in 6 feet on his property, and the neighbor there was hoping to pick up that 6 feet because his fence line fell short.
Mm-hmm.
So I went, and this was 15 years ago. It was one of the first things I did when I was up here, and I went and met with the owner of Raymond Farms, and he met me at the corner, and I explained everything to him, and I showed him everything, and he said, Mr. Brown, you don't understand much about dairy farming, do you? And I said, I don't know much about it at all. He says, well, we're standing right here, and you see this ditch that we have. And he says, that ditch is on my property, but it's outside my fence line. And I said, okay. And he said, I put this fence here for a reason. I don't want my cows in the ditch. That you don't want your cows in the ditch. So I know which property's mine. And those are the kind of things that came up. And he was absolutely right. He didn't want to give up his 6 feet, but he also didn't want his cows trouncing through the ditch as well. And so, you can't really go off of the fence lines because they serve different purposes than the deed lines do.
Okay, I got one more question because we're on the last couple minutes here, but I got to ask this one. How about water? Do you own water? What does the title company do with water? Water shares, I'm talking about.
Right. Well, in water,
how does water work?
Water is a very, very interesting animal. I wish that Kim Smith in my office was here because I think she probably understands water as well.
Sounds like another show.
It could be.
Get ready, Kim.
Because water is a very, very difficult animal. But water a lot of times is transferred with property, and it's all different. Wells usually stick with the ground, but not always. Certificates can be stripped. Water shares can be stripped, and all of your farmers and all of your people that the water is their livelihood will understand that much better than I do. We will transfer water shares. We will transfer wells. Sometimes things have not been done well enough where it's a little bit more difficult to do that with us. But water, we do not insure water. We have our underwriter will out of a completely different department, and for some people that's a very, very wonderful thing. But we'll help.
It is 2 separate transactions, though. It can be.
It's
meaning you can sell your land without water.
You can sell your land without water, and even if you're selling your land with the water, we do not warrant that water, and we're very specific that we don't warrant. But we will help to transfer it, and we'll help you get what's yours. And that's a very general answer. Because water is a separate show.
There's a whole lot of things going on with water, isn't there?
Yeah, there is.
Now, if you're in a subdivision in town on city water, that's not so much to worry about.
Not nearly as big of a deal. But if you're buying a development or if you're buying a ranch, your water 9 times out of 10 is more important than the ground itself. And if the water doesn't transfer, boy, that could be a problem.
Mike, tell us where your business is at and your phone number, and you know what? Tell us who your staff is too.
Okay, we're at 490 West, 100 South. We bought. Everybody that comes in, all the old timers, they say this is the old Duke home, and people used to go in there and register their cars, and the assessor's office was held out of our home. So we're right there as you leave from Hebron and head out to Midway, and most people will recognize us one way or the other. But it's a wonderful home. My staff is wonderful. We've had everybody for a long time. Kim Smith has been with me for about 12 years. Andrea Frisbee has come and gone several times. She was the first person that I hired up here. I have Abby Phillips, who has been with us for probably about 7 years, and Aileen Schidler has been with us she's been with us about 2 years now. So,
And I can testify that's a good bunch.
yeah.
What's your phone number?
435-657-1220.
I will say that if there's any transaction you're involved in, you do have a choice if you want to go to any title company. And I'm not going to say anyone's a bad title company. There's great title companies. All of them are good in town. Mike definitely does a fantastic job. I can personally say that for sure. So thank you very much, Mike, for being on today. You know, I'm sitting here going, the hour's up, and we're not done. There's so much more to talk about.
Yeah, it's for people that don't know a lot about their title companies, which is everyone, we are in the background and we are working hard to make sure.
And how critical to know this stuff.
Yeah,
truly.
Yeah,
Understand what you're truly buying, why you're buying, what could happen. Just be aware. It's just that's the purpose of the show. Well, this is KTMP 1340 AM, your hometown radio station. Today's show is brought to you by Guild Mortgage Company. Your loan on time, every time. I'm Tom Stone. I'm a loan officer for Guild Mortgage here in town. We're at 175 North Main. I also get to have the opportunity to host this show once a week. Thank you for tuning in. Next week, we're actually going to talk about appraisals. We're going to have an appraiser come in, so title work, appraisals, and then after that, we're going to have Jeff Finterly come on, and he's going to talk about specifically short sales and foreclosures and how that transaction all goes down. So thanks for tuning in, and we'll see you next time.